Silicone Valley Bank. What happened?
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
When you think of bank runs, you probably think of the 1930s or Mary Poppins or sometime far in the past, because that kind of stuff doesn't happen anymore. But it does, and it did last week with Silicone Valley Bank. Bank runs happen because of one fundamental fact about banks. Your bank does not have your money.
The money's not here. Well, your money's in Joe's house. That's right next to yours. And in the Kennedy house, and Mrs. Maitland's house, and 100 others.
All banks do the same thing. They take money from depositors, they loan some of that money out, or they go buy other assets. And they can keep doing this. They can use other people's money to make loans and to buy assets all they want, unless people all want their money back at the same time. And that results in a panic and a bank run.
The bank won't give someone their money.
Well, I'm going to get mine. Come along, young man. Every penny.
But what happened with Silicone Valley Bank? Why did people want all their money back? And why didn't the bank have their money? Unlike the 2008 financial crisis, these weren't bad loans. These weren't toxic loans given out to people who couldn't pay the money back. Instead, it had to do with bonds. Bonds or securities are usually a great asset because they're very low risk and they earn a set rate of return. So Silicone Valley Bank took people's money and they went and bought bonds at a set interest rate. But as interest rates increased, the value of the bonds that they purchased went down in price. They were less valuable. And normally that's not a problem unless you have to sell those bonds early, which is exactly what happened. Customers wanted to take out more money than the bank was expecting, and so the bank had to go sell those bonds at a huge loss, means they didn't have enough money for all those withdrawals. And of course, when people heard that the bank might not have enough money, they want to take out more money, and that led to a bank run.
This prompted US regulators to step in with emergency measures, including seizing another bank 3 days later, in a bid to ease fears that depositors might pull their money from other lenders.
If everyone freaks out at the same time, if we all go to our bank at the same time, we are all in trouble. The whole job of the government right now, and the Fed, the Treasury, all they're saying is, listen, banks are cool, you're all good, you do not need to go to your bank. Yes, you're insured up to $250,000, but you don't need to go to get your cash out of your bank right now. In fact, don't. But why? Because your bank does not have your money. Hey, thanks so much for watching, and for Tiger5913 for leaving this comment and reminding me I should definitely make a video about Silicone Valley Bank. Make sure to leave a comment below, let me know what you want to learn about, and take a look at my ultimate review packet, my worksheets, my workshops, all that good stuff. Thanks for watching. Until next time.